What do you see as sort of the growth prospects from here as the Fed is having this wrestling match with inflation?
Are we going all the way back to 2 on inflation, which was the Fed's original target pre-pandemic? We're going to stop somewhere higher. And I think we're going to stop somewhere higher, like around 3.5 or 4. And I've argued that in the post-pandemic world, that we've got a number of secular changes, the end of cheap labor, the end of cheap goods and the end of cheap energy. And that's why inflation is going to go higher. Demographics and technology still exist to help hold inflation down, but those 3 are too big for demographics and technology to overcome. So we're going to have higher inflation.
Just talked with Lance Roberts over the weekend, who showed a chart of how past Fed pivots. That's all the market cares about, right? It's the pivot, right?
It's a junkie. The market is a junkie, and their drug is cheap money. And they want their pusher, Jay Powell, to give them an injection, if you want to think about it in those terms.
That's a great analogy. And in the past, at least, looking at past Fed pivots, they haven't resulted in an immediate sugar rush in bear markets where the Fed has actually shifted policy. It has months to quarters afterwards when the market finally found its bottom.
I know the chart you're talking about. Lance does great work. And it's very simple. In the past, when does the Fed pivot? When they panic because the economy hit a brick wall and it's bad. And then they pivot, and does the market rally because they're pivoting? No, it's panicking because everything's falling apart.
Everything's so damn bad. Yeah, exactly.
Right. And now all of a sudden we want the Fed to pivot, but doesn't that mean that things are going bad when they pivot? No, this is going to be the good pivot or something like this. Is kind of the logic that we're trying to employ right now.
Right. So I think we've got 2 big questions, right? One is, market's totally expecting the Fed to pivot, and it's looking for any excuse to say, yes, now we've got the evidence that he's going to do it, right? And the question number 1 is the Fed going to pivot? Because, of course, if you listen to Powell, at least, and I understand why people are skeptical of the Fed, but if you listen to Powell, he's taking incredible pains to say, folks, pivot ain't happening. I'm going to keep raising in the near term, and then I'm going to pause, and I'm going to hold out there for a long time. So he's basically
saying might have to start raising again, if inflation doesn't come down.
Right. If it doesn't, yeah. And then the second one is, let's say he does pivot. Then the question is the pivot effect going to be what the market is anticipating? And I think you just made a good case that, it probably won't be. If the Fed is forced to pivot under, this particular set of circumstances, it's probably going to be because some god awful things are happening. And we're all going to be freaking out and seeking, shelter at that point. We're not going to be looking to roll our dice and buy meme stocks.
Let me take the second point first. What they're hoping for on that Fed pivot is kind of what we had going about a month ago. British pensions blew up because of their mini budget and stuff.
Right.
And interest rates in the UK soared. And, people were like, almost like the reaction in the market was, oh, good. It's something that doesn't bother me. I'm not British. I don't have a British pension. Neither do you. And it'll get the Fed to stop. So we win. Right. No, it doesn't work that way. It's not something that happens to somebody else that the result is your portfolio goes up 1,000,000,000%. It's something that happens to you is what gets the Fed to pivot. So yeah, that's the good pivot scenario that everybody is hoping for. But you're right. Will the Fed pivot? Here's the problem. Jay Powell has made it very clear that tightening financial conditions is a key ingredient in bringing down inflation. That's a euphemism for you and me and everybody listening to us. We all lose a lot of money and we have glum faces and we stop spending or spend less. And then therefore it reduces demand and brings down inflation. So if the market is going to celebrate and rally, this is what he talked about in August when he gave the 8-minute speech at Jackson Hole. There is going to be no pivot because he needs financial markets to stay down to create a reverse wealth effect. Now, where the confusion, I think, is coming in is there's a number of members of the FOMC that are not in agreement with Jay Powell.
So it seems that you are skeptical of the rally that just fired off last week.
I tweeted out something today that I think is perfect, that fits into this mentality perfectly. The DAX, which is the German stock market, rallied 20% off its September low. And Bloomberg had this big red headline. I'm looking at my Bloomberg right now. DAX up 20% in a new bull market. And I looked at it and I said, okay, if you start the year, well, in January 1st, the German stock market started in a bull market. Then it fell 20% into March. Then it rose 20% exactly, into May. Then it fell 23% into September, and then it rose 21. And I said, here's the problem with all these dumb definitions. We've had 3 bull markets and 2 bear markets in calendar year 2022. So we're on bull market number 3 in November for the year. And don't worry, there'll be another one after this and another one after this. And my point is, can the stock market rally 15% or 20% off the low? Sure, it almost did it in June. It rallied from the June to August high 17% before it turned around and made a lower low. It could do something like that again now. But is this mean that this is it, that October 10th at 3,400 on the S&P was the low?
They're just not believing that the Fed has actually changed its spots here, right? And the Fed is trying to tell everybody, hey, I'm now different than, the game has changed. And the market's just saying, nope, we don't believe you, right?
This is a monster they created. They created this monster after 15 years of money printing, and they underscored it with COVID. And they don't really get a handle on the OECD, Organization of Economic Cooperation and Development, looked at all of the 30 developed countries of the world. And they found that during the lockdowns of 2020, only one country had personal income rise. Personal income is your paycheck plus whatever investments you have, plus whatever government transfers you get. It was the United States. Why? Because everybody lost their job, the economy fell. And what did we do? We mailed everybody money. You wind up becoming your financial position improved because we locked the economy down.
Right.
And the mentality that was taken away from that is, I'm bulletproof. I'm bulletproof, man. When things go bad, go to the mailbox. There'll be money in the mailbox. And when things go good, my brokerage account goes up. And that's the mentality they helped to create. And that's what they're fighting against right now.
Do you see going into next year big knock-on effects from this higher cost of capital that we suddenly now have?
Yes, I do think something's going to break. What? I can't tell you, but I don't think anybody can. No one could have told us 2 months ago that the British pension plan with liability-driven investing was on the verge of going over the side. And yet it was, and it did. And so, and even those that are most acutely involved in that didn't see that as being the issue. But there will be something. There always is.
Do you expect there to be a recession next year? And if so, what magnitude do you expect?
Yeah, I do. If we do continue to see signs, at least in the near term, let's start in the near term. The signs of a recession are hard to see right now. 261,000 jobs. Initial claims are still, fairly low at around 225,000. These are metrics that we look and say, is the labor market in trouble? No, not really. Earnings, as I said earlier, they're growing at a 4% pace, but it's not the inflation rate. Okay, but they're growing. They're not contracting at a 20 or 30% pace, is what they often do in a recession. So is earnings a disaster? No. Housing, there's your one weak point that you've got right now. Housing is a big problem. But when asked about this at his press conference a couple of weeks ago, Jay Powell dismissed housing. Oh, but home prices were up a lot in 2021. So we've given back some of your big gains, but you're still net ahead of where you were 2 years ago. He doesn't seem to be concerned about it. So yeah, when you add it up, I don't see the signs that a recession is there right now, but I think the Fed's going to conclude so we can keep going.